We all want to get better at trading. We all want to be more consistent in our wins. We all want to control losses, and we all want consistent account growth. And there are three things that have led me to those factors that have made my career over the last 30 years something that I now know I can replicate and share with others. So we're going to get into the 3 trading superpowers in this video. And it's not real, I'm not trying to be cute. These are superpowers. Are they easy? No. However, they are doable. I'm going to show you what we're doing right now, show you trades we've got open, show you trades that we're looking at for next week. And starting off with the first superpower is watch list building. 80% of our trading has to be watch list building. A lot of what we've got in our open book right now, and when I go over the open trades, you'll see Philip Morris twice. We have the 160 and 165 calls. Metals and mining, we have the 57 calls. Uranium, the 30 calls. Related to uranium, we have NewScale, the 30 calls. Oil and gas explorers, which allows us to take advantage of strength in crude oil and natural gas. And finally, Cisco, a relative outperformer in tech. Notice I'm not piled into necessarily a concentrated single sector. It's not all tech. It's not a focus on the Mag 7. In fact, we have some unusual names here because they're showing relative performance. So let me show you how we go about doing this. I'm going to do this with 2 sectors that maybe you're not looking at now. Maybe you are. Either way, they're great sectors. And I'm going to kick it off with the FFTY. Let me move the clock over a little bit. This is the IBD Innovator 50. And if there are 2 lists of stocks that are going to take us outside typically the S&P, NASDAQ, Dow, and kind of hone in on stocks that have a lot of attention, social sentiment that's bullish behind them, you're going to find them in this one of 2 sectors. FFTY. What's in an uptrend here? If watch list building is what I should be doing 80% of the time, trading is really only what I should be doing 20%. In fact, the trading part of my life takes up the least amount of time. It's the other superpowers that take up the most. But let's start with the first. What you trade is more important than how you trade it. So if you're looking at this right now, intuitively, and I'll tell you what's on this screen, intuitively, I think a lot of traders would say, Rag, I see this green, all this green. Follow the green, gang. Follow the green. Now, not all of these uptrends are going to have sufficient open interest, but it's these names that I want to focus on the most, where the momentum, the MOMO, is green. So I would expect those momentum bursts through levels of resistance, and I would expect a dip to be bought. For example, urban, I would expect this 70 area to hold. CLS, we would expect these support levels. PLTR, even though it's been pretty volatile, again, I would expect dips at support to hold, right? Same thing with hood. Keep these on your list. If the NASDAQ and risk appetite, the S&P are all moving higher, FFTY is a great symbol to watch, and those particular symbols would be at the top of the watch list. The next one is Buzz. Now, this list is made up of names that have positive social sentiment, mostly from social media. Again, symbols that traders are talking about, symbols that will have attention, and if that attention meets a trend and bullish momentum, look out, right? Now you'll see there's some overlap here between the NASDAQ and a little bit of overlap with the FFTY, and that's okay. Realize that symbols in Buzz are going to be a little more sensitive to the NAS. So if you like the NAS, check out some of the names in Buzz, like Hood. I actually even like Game. It's not near the top of my list, but this is a sleeper right here. We have some support. The trend that was up. Right now, it's lost bullish momentum and bullish trend, but it's neutral. And neutral is fine because I would expect a neutral trend to pick up from where it left off and see continuation. In a sea of traders that are looking for tops and bottoms to pick, counter trend trades, be a trader who favors continuation. It's the most likely probability, and Game around 30 would definitely be something to look at next week. All right, the next thing I'm going to take you to is where this BUZZ is overlapping, and that's a lot with the NASDAQ and the XLK. So once again, watch list building 101. Find where the momentum is bullish, find where the trend is bullish. Now, the way that I do this is with the top tier candles. I want at least 5 green candles in a row. If it doesn't have 5, don't even pay attention. So AVGO is getting out of the post-earnings noise. You've got Oracle. There's that Cisco, nice little gap on Cisco. We took some nice targets there. PLTR. IBM's another great one. I would keep an eye on any symbol that has a trend. That would be the top of the watch list. And then any symbol that might not have a trend but has at least 5 green candles. Once again, what do I want to avoid might be the easier answer in XLK. Thanks, but no thanks on Apple, Salesforce, and Now. Just pass on those, right? Rather than waiting for something to play catch up, find the things that are strong on those days that are down and then scoop those up essentially on sale. Again, watch list building is a superpower. Now, if I'm thinking about another symbol that's on my radar right now, and actually this is the newest entry we have in the Sector Secrets Mastery. I'll show you the alert as well. This is GDX. So the alert, I wanted to share with you the alert style that I use in the Sector Secrets Mastery because it's different than maybe what you're used to. When we send out the alert, number one, we send it out before the trade has triggered. So this is literally a setup alert. This is something you can go choose to trade. This is something I'm watching, so that's my job to share what I'm watching with you all. And then what I want to do is have directional buys, have expectation of move it higher. In this case, with GDX, I've got a beautiful consistency of the green candles. I don't have a trend, however. You'll notice the Momo is bullish. Love that. The candles, I do have at least 5, if not far more, green candles, but the trend is sideways. So today we decided to be a little bit more conservative with our entries, a little bit more moderate to conservative, waiting for a deeper pullback to buy into. So I bought the 50 calls, and I'll share with you the entry in just a moment. But this is what an alert looks like, and this is what a trading plan in its entirety looks like. I know what my triggers are. I have up to 3. I know where my scale out is. I know where my optional scale out is, which gives me a chance to manage risk by moving to a break even. So let's talk about the second superpower, and that's risk management. Risk management in many ways is the one thing that a lot of traders maybe are struggling with, because risk management for me is not 100% premium risk. Risk management for me is not adding to a loser in an effort to reduce the cost basis. Risk management is looking at the setup, waiting for the trigger, and then once I buy that option, I look at a certain percentage of risk that I will allow that option to move against me. It's not only a cap for risk in terms of per contract risk, but it's also risk to the account. How many percents of your account right now is at risk? Well, we have something called desired account risk. It's a metric we use when we're building out our position sizing. And that allows me to ask myself, what percentage of my account am I willing to put at risk for each trade? Now, I'll tell you, it's seldom up to, it's seldom 5%, but that's the max. That's the maximum. I'm somewhere usually between 3 and 5% account risk. And that then dictates how many dollars of options I can buy, and then I'll spread that across my different triggers. So right now, I have triggered the 5150 GDX, and I actually had 2 levels from which I was willing to buy that. And you'll see here, we bought GDX 50. I bought the GDX 50 calls, and I have 2 fills. I bought some at $235 and $230. I'm not risking all $235 or all $230. I'm risking a certain percentage of this within that desired account risk max, right? So barring any gaps, I have a really finite level of risk to the account and risk per contract. All right, so the last superpower is letting winners run. And it's probably the one thing I will tell you. Here's what I've observed over 2.5 decades of really intense teaching, over 3 decades, almost 3.5 now of trading. You can stop a loss. I think most traders get really good once they learn how to take a quick loss. It feels good to be out of a problematic trade. It frees up mental bandwidth. It frees up capital. It actually starts to feel good, and I find traders can adjust to that, take a quick loss really quickly. But the part that I've realized that traders struggle with the most is letting a winner run. So let's talk about the trades that we have right now in the mastery. And I want to emphasize these are all alerts in the mastery. And if you take a look, in fact, if you want to pause the video, you can take a look at what we've got. Philip Morris. Now look, we bought these around $400. We scaled out at $800, and notice we scaled out at just over $1,200. And this trade continues to work pretty well in our favor. It still has about 2 days, 2 weeks, not 2 days, 2 weeks to expiration. So that third target is time, or usually time, or that final level at which I'll say, you know what, maybe Philip Morris is stuck. Maybe it just can't get through 184, and the next time it visits 183.90, I might scale out and finally close this trade. But the only way I saw better than a double on the 160s and a triple, right? It's a 3x trade on the 165s is because it wasn't this A to B point type trading. Get in at A, get out at B. It was get in at A, scale out at B, scale out at C, scale out at D, right? 3, you know? And if you're not thinking about scaling out and buying multiple contracts, you're leaving a lot of money on the table. You probably already know that. And so one of the best ways you can do this is have a desired account risk, understand the budget, and when you can, buy multiple contracts. I encourage my traders to consider, if it's within allowable risk, at least 2 to 3 contracts. And that brings up price. Well, to buy 2 or 3 contracts, we have to think about our account size and the cost per contract. So for example, here's a really inexpensive one that's really liquid. So my larger account traders, we have some traders that say, hey, Rog, how do I manage a $300,000, $400,000, $500,000, $600,000 account? And then I have other traders who will say, Rog, how do I manage the risk on, a $15,000 account or a $10,000 account? And it's really 2 factors. One, for the smaller account trader, it's got to be an option that has price low enough to buy up to at least 3 contracts. For the larger account traders, it's understanding that we need liquidity in that strike so we can buy multiple, sometimes dozens of contracts. So that's where there's a balance between price and open interest liquidity that I'm always looking for. I'm a slightly larger account trader. I mean, it's larger than some, I'm sure smaller than others, but I'm going to oftentimes buy 20, 30, 40 contracts, depending on the price of the option. For others, they're buying 2, 3, 4 contracts. And we can do that because of this scalable approach of looking at a relatively reasonably priced option and liquidity. Another low-cost option that we were able to take advantage of was the URA, uranium. Nuclear is a really hot, there's 2 sectors that we're talking about a lot in the Sector Secrets Mastery. One is, aside from those social sentiment stocks I showed you, looking at stocks within URA, or those nuclear stocks, and then also looking at quantum, right? Quantum stocks, those are moving quite well right now. Well, I've got 2 plays in this uranium or nuclear place of interest. URA itself, which is an ETF, and SMR, which is NuScale, and a stock that's weighted within that. This is a relatively new position. So let's talk about a less mature position, one that hasn't hit maybe 2 targets. We scaled out today of uranium for our T1. Now, this is risk management 101. Bought it for 265 to 260. Now, my risk per contract is nowhere near what I pay. So I'm, in general, going to be looking at risk from the perspective, let's say, of a $265 contract. I'm going to be looking at risk to that contract in the vicinity of about $65. Now, scaling out at 320, if I bought these things at 265, look, I'm not getting out of bed usually to say, hey, let me buy something for $265 and then scale out at 320. I'm not looking for that 55-cent gain, but this is the superpower. Notice that the T1s are pretty sedate. They're profitable, but I'm not looking for this 2x, 3x trade on the first target. That's going to be the second, maybe third target. So the first target is meant to be prudent. Pay yourself when you can, not when you have to, means when you have momentum going in your favor to and even through the target, scale out and move to break even. So this is really a lot of the nitty-gritty that I share with our traders in the mastery. You can see with Cisco, bought these for $1.40 and $1.30 Today I took about $1 per contract. Do I anticipate that Cisco is going to be above $3 or $4 if this momentum can continue? Absolutely. We've broken out above a key resistance level at approximately 65.70. That breakout is a momentum burst. It's going to attract more buyers. Let me show you what that looks like. So very likely what we'll see on Cisco is more follow through, because this has hit that high where retail traders say, oh, there's a momentum breakout, and they buy. Same thing with that URA trade. There's that momentum breakout. Again, we're probably going to see traders start to look for opportunities to continue to get long at the breakout. So the momentum burst helps follow through, but we're getting long on the pullback. So we want to get in pre-Momo, right? And then take advantage of the Momo as the trade follows through. Same thing with the XOP today. This is the oil and gas explorers. So we bought these at, you can see here, $3.45, scaled out at 5.05 today. Now my Momo burst hasn't happened yet. That real Momo burst is going to be at one of two levels. If we can take out basically 124.80, and then the real burst is going to be if we can take out 128.35. So we still have some Momo burst to come, and I've got 2 weeks to be able to take advantage of that. But in the meantime, I've paid myself, right? So 345 to 505, and I've managed risk. Those are the three superpowers, gang. Watch list building, risk management, and letting winners run. And if you can buy multiple contracts, that's how you can do it. Have an awesome weekend, and I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.